Okay. Let's go ahead and get started. And obviously, if anybody comes in late, not a problem. You guys, this is designed to be helpful for you. So please come in, leave, ask. We'll hold questions until the end of the structured presentation, if you would. I'm going to try to get through this as quickly as possible so we can get to Q&A. But nobody's ever going to offend me if they have to leave early. Please come and go as you please. So today we are here to talk about deck building, and basically, your deck is the front porch of the pitch process. It's the front porch of your business for the investor. So you're trying to create something that share screen 3. You're trying to share something with a clean, clean minimal visual design. You're trying to tell your story in movies, in filmmaking. There's this whole deal of show them, don't tell them, right? So as in movies, as much as possible, you want the story to be told through what's happening on the characters' faces, other stuff that's happening in the scene, and so forth. Deck building is the same way. And the biggest mistake that I see, and I've got a couple of other resources that I'm going to refer to here. One of them is from Crunchbase. And one of the things that they comment on is overuse of text. Let me see if I can find that one. This one, like this slide is too much text. I usually tell people that yeah, so wordy. Like there's too much wording happening on this slide. I normally tell people you try to keep slides under 20 words if you can, and really for sure under 50 if possible. So then what do you do to tell the story? You're using graphs, graphics, and photos to tell the story as much as possible. Can you guys see what's on my screen here? Is everybody seeing my this deck that I'm looking at right now?
Yeah, it's
You,
clear.
okay. So I'll go back to the beginning of this and we'll talk about sort of basic format and so forth. By the way, I didn't dress this deck up quite as much as I would like. The visual design here is a little bare. I would probably spice this up with some sort of accent color on the background here. And then the other thing that I would add to a deck like this is some just a little bit of texturing on the slide. It just makes it more interesting to look at. Investors are simple creatures sometimes, just like anybody else. We want something that's visually interesting. So first thing, problem solution framework. You want to start with a clear problem, a concise solution, your value prop, keep it to one or two slides. These are the two most important of the big eight elements. If the investor doesn't buy your problem and solution structure, they're not going to invest in the business. And then I'll sometimes say solution with basic mechanics. So that is, what is the business model? And the deal here is you want to keep this straightforward enough that if you do spend a slide on the business model, you want all of the business, what you're going to say about the business model to fit on that one slide. So sometimes people will split. They'll have a problem slide and then a solution slide. Sometimes they'll combine problem and solution and then do a separate slide for business model. Either one of those is fine with me. Then market opportunity, and you'll see, there's the thing, Crunchbase's thing that we'll go through in a moment here has a deal about, yeah, you'll see either this version of market sizing with the circles sometimes, or sometimes you'll see the circles within each other. That's very familiar formatting for investors. I like doing it that way. Um, you want to one other thing that you want to be cautious of when you're doing this, and I'll kill the screen share for just a second, is you want to make sure that you want to make sure that the jumps down in your market sizing are not like that they're not too big or too small. You want if your total addressable if I'm looking at a total addressable market of say $10 billion and the serviceable addressable market is $8 billion. It's too small a jump. I don't believe it. But on the other hand, if total addressable is $10 billion and serviceable addressable is $2 million, and I've jumped by, 5,000 times in term the difference between your total addressable and your serviceable addressable, That also is not believable. So it's kind of silly because really there shouldn't be limitations to this, but investors are used to seeing sort of order of magnitude between 10 and 50 times a jump down from one to the next. And so, you know, does that mean that there's a little bit of that sometimes a little bit of sort of fudging and finding the right framework to get those jumps correct uh, is appropriate? Yeah, it's silly to say it, but yes, that is sometimes necessary. If you have a total addressable of 10 billion, just using that as an example, and your serviceable addressable comes back at 5 million, it's too big a jump. The investor, and then you still have to get to your serviceable obtainable. And a serviceable obtainable of 1 million, for example, is not going to get any investor interested. There's the other side of the coin, which is that if you're saying your serviceable obtainable is 1 trillion, obviously nobody's going to believe that either. So you have to figure out where you're going to fit in that middle, so to speak. All right, going back to the screen share. So market opportunity and then competitive landscape. And you guys have probably all heard me refer to the Gartner Magic Quadrant chart. But if you haven't, then here it is. Gartner does these things where they create these quadrant charts and they'll sort on things like ability to execute and completeness of vision. That's the classic version of the Gartner chart. But you can frame it any way you want. And the idea of this is try to get something that places your company at the top right with the leaders. And so whatever you're sorting on, you want to be sure that you're strong on both of those axes, so to speak. You want something where your company is up here at the top right. You're the best competitor in the space for these two methods of evaluation. This is a great, great visual. I'm so jealous that I'm not the one who thought of this. I like when people have good ideas. So yeah, competitive landscape, and then traction and timing. So here we've done two different charts. We've done one for we've done two kind of roadmap looking pieces here, and I would dress this up a little bit more if I had a month to prepare for this webinar. But the traction is basically um, you can frame it in terms of revenue. That's obviously the most valuable one. We talked some about this on Tuesday as well. You can frame it in terms of wait list. You can frame it in terms of a distribution list, letters of intent, social media following. All of those things are relevant. Every piece of traction matters. Obviously, revenue is the most important one. If people are already paying for your service or product, that's the best thing you can have. But if you don't have that yet, and if you can't have that yet because you just can't take the product to market until you get investment, then you want to find other methods of evaluating your traction. And traction, so this one they've kind of combined the AI that helps me put this together, kind of combined the traction and the roadmap. You can describe your traction in bullet terms if you want to. The roadmap should look something like this. You want broken out into quarters and years and things like that. Um, and then here's another one that this is another example of a roadmap slide. And I haven't done a bunch of visual dressing with this, but this is another way that you could describe here's the progress that we expect. Now there can be a temptation if you're a technical founder to talk mostly about the tech, but just do make sure that you're addressing your roadmap from a business perspective as well. When do you want to expect to be at these particular revenue markers? When do you want to expect to be at this particular user base? When would you be making a hire, a next hire? When do you expect to reach profitability, et cetera, et cetera? Then the team, yeah, I generated two middle-aged white guys, but that's fine. The one thing that I would say on this is so this is good. 15 plus years in industry, previous successful exit, relevant experience and expertise. I would put logos on here. This is another way of making it visually friendly. And these don't just have to be companies that you've worked for. They can be companies that you've worked with. They can be partners that you served with previous companies or previous startups that you were part of. I like logos on here. The most important things that you can have are statements of success, kind of like you would put on a resume. Previous successful exit, drove change resulting in impactful growth at two unicorn startups. So two unicorn startups is good. What was impactful growth? Put it in numbers if you can. Um, and then the funding request, you want to clearly state, 2.5 million seed round at 10 million valuation. Very clear. 2.5 on 10, I'm getting 25% of the company if I write the whole check. Use of funds, product development 40%, marketing and sales 35, operations 25. This is a good breakout. One thing I will say as an investor, I'm a little bit twitchy about is when marketing and sales is 80%. I'm like, you don't know if anybody's actually ever going to buy this, do you? And usually as an investor, if yeah, that's a red flag. If it's all like if the great majority of it is marketing and sales money, it's just you don't know what your go-to-market strategy is. So just be cautious of that. And then yeah, we're back to, you know, visual storytelling, standalone readability. You have to make sure that it works without you talking them through it. And then here are some don'ts. We'll get into some don'ts and then we'll get into Q&A. So Crunchbase did a good job putting this together. Some don'ts are this slide is just very visually complicated. There's a lot to read here. Investors, all right, remember, in a standard angel investor network pitch, you're going to have 8 to 12 minutes of structured presentation, and you're going to have 8 to 12, 9 to 12 slides as well for that presentation. So you've got about 1 minute per slide. There's no way you're getting through all of this in 1 minute. So just keep that in mind. Um, yeah, same thing here. Just way too much happening here. Your investor can't visually process all of this in 1 minute. Now, this is very good. Clean, clear, simple. And it isn't always that less information is always better, but when we're founders and we're really excited about our startup, less information is usually better. You've got to decide what is the highest impact stuff. What's the stuff that the investor absolutely needs to know to write me a check? This is good too. Simple visual. Business model makes sense. Got their target markets. Unreadable text is often a symptom of just too much text. Like there's no way that investors sitting in the back of a pitch presentation are going to be able to read all this. And again, it's just a symptom of having too much information on the slide. Confusing visuals. If you're going to use, one of these circular graphics, you have to make sure that the information that you're presenting makes sense for something circular. And then, weird color gradients can be distracting, that sort of thing. This one is from Buffer. Buffer's done really, really well for themselves. But they've got people on here who are not competitors. And a competitive landscape, honestly, should probably not be a circle graph. You want something that's more clear, and if you're laying out a competitive landscape, you want the spatial design of that to be very, very clear. This is good. 10 weeks, we reduce it to 3 minutes. 35 pages, we can put it 100% digital. 7 policies, we reduce it to one. 90% exceptions, 100% coverage. All right, so we got a couple people in the waiting room. So yeah, too wordy. Just avoid too much text. You're not writing a novel. You're using graphs, graphics, and photos to tell your story as much as possible. This is simple. We make airlines pay you 650 for screwing up your flight. Okay, draws my interest. I'd like to know more about that. They rated this as a good one. I actually don't like this slide that much. There's a bunch of stuff on here that I don't know if I'm supposed to be reading or not. Um, there's some extra text. I kind of don't know what I'm supposed to look at first. So be careful of that. Audience not in mind. Do not put offensive. I mean, everybody kind of knows this in 2025, I think, but don't put offensive language on your deck. Um, you know, we, yes, don't do that. Um, yeah, don't say anything about like gangs or gangsters or anything. Like you're not trying to be edgy. You're trying to close investment. So be careful of that. They like this slide. I don't like this slide. This slide's not visual at all. It's minimal on text, and yeah, it's Uber, so I know everything that Uber did is awesome in startup world. I don't like this slide. It's all text. There's no visual formatting. There's ways to make this much more investor friendly. The information here is good, but the formatting is crap, in my opinion. Lots of buzzwords. Yeah, you got to be careful with buzzwords. Just make sure that what you're saying is not something that every startup could say about themselves. Um, so, and again, all text here. They like this slide. This is another one that I don't like. I feel like there's too much going on here. I don't know where I'm supposed to look first. I can't read this text. This is way too small. No investor in the back is going to be able to see that. Unusual, unusual like esoteric metrics. Um, Freaking G billion. Everyone eats. Yeah, I mean, just sort of the kind of obviously this is a win. That approach on your deck, I think, is not a very good approach. Any passionate community, too buzzwordy, not clear enough. Like, okay, what kinds of communities really? Because it is not going to serve any passionate community. That's just not true. Um, Blah blah here. Not yeah. If you're doing a metric slide, you obviously need numbers on there. This is so this is the good marketing visual with the circles. Um, I would put a little bit more information on the market slide, but that's just me. This is good. This is the kind of graph you like. I still think this text is a little small, but it's very visual. It's soothing colors too. I like this kind of a soothing green and sort of this soft kind of mustard yellow. Um, Low churn focus is good. I like the visual they used here. Oh, this was one of the last ones I wanted to get to on your team page. These photos are really nice, but like, what have these people done? Yeah, all we know is that you have a nice smile. No one cares what you look like. So logos, success, little success bullets, things like that. Oh, and do not do demo videos. I know it's very tempting. Video is a very powerful medium, but not on a pitch because you don't control the tech. You press play and the audio doesn't work. Someone conferences in and they can't hear you. The Wi-Fi goes down. Catastrophe awaits. Do not use video in your deck or in your pitches. Um, Snooze fat. Yeah, this is just buzzwords. Okay, so that brings the structured presentation mostly to a close. So we've talked about some of the do's, we've talked about some of the don'ts. Let's open the floor for questions. You can either unmute yourself and start asking, just raise your hand if somebody else is in front of you, or you can type messages in chat.
Hey, Ben, it's Kaju
Yes.
here. What about a live product, like actual demo, screen share on the computer? How would that work?
So I think that's, it's if you are if you have enough confidence in it that you're willing to say, I'm confident enough that in this, knowing that it will tube the whole presentation if it doesn't work right. If you're confident proceeding forward with that, with that in mind, if you're confident enough that it will work right, like
Okay,
if you're basically 100% confident that it will work the way that it's supposed to work, go for it. If you're
okay,
like 90% sure or 80% sure, I wouldn't mess with it because it will kill your presentation if it doesn't work right.
okay. Cool. Well, one quick more question. Sorry,
Yeah.
Scott.
Yeah,
What
go ahead.
about if my product, I think Dimitri has the same kind of issue, is his is blockchain based, mine is healthcare, specific kind of healthcare.
Yeah.
How niche can I go? Like investors are that are not of the same, uh, from the same domain.
What I would do is I would in your opening presentation, if you're presenting to a network or a group,
Hmm.
different investors making different decisions, then I would keep it pretty broad based at first, and then offer to get into more technical detail on the deep dive because there's often a deep dive afterwards. Now, if
Yeah.
you're presenting to one VC firm and they're all gonna make sort of a consolidated decision,
Hmm.
then just be prepared. Those presentations are usually longer anyway. If you're just doing one presentation to a VC, they'll
Yeah.
probably interrupt you when they want to and ask technical questions as desired.
Yeah.
Um, what I would do is I would put ancillary slides on your deck where you
Okay.
get into more of the technical detail, and then just keep your 9 to 12 very clean.
Okay.
Make it accessible for somebody like me, like a
Yeah.
reasonably smart person who has no technical knowledge of your space.
Cool. Thanks, man.
Thanks, Kaju. Scott, what's up?
I appreciate the caveat of a reasonably smart person, right? Self-deprecation at its finest. Um,
Yeah,
I just I wanted to offer maybe a thought process to say if we did a community, Discord option or whatever of like rip apart my deck
yeah,
a solution.
yeah. I think that
Um,
could be.
I mean,
I
I've
think
done
that
a
could be
whole
very
bunch that have
helpful.
done
Yeah,
great and some that have done terrible, and everywhere in between. I just thought maybe other people could benefit from that as well.
yeah. Kind of a roast my deck channel. Uh,
Yeah.
yeah, I would say that's very helpful. Would you drop that in the suggestion box, Scott, and just tag me? And by the way, that's a good way to get sort of any of this stuff moving forward. One other thing that I'm going to start asking people for is for those who have not opted into a Flare either as a mentor or as a helper. So this community is free. We want you to be able to get mentorship and be able to, pitch. We're setting up pitch structure very soon. We want everybody to be able to do that for free, but we are going to ask everybody to either help out with mentorship or a little bit of structure building in exchange for the stuff that you are getting for free. So if you have not opted into a role yet, please do so. But yeah, Scott, feel free to drop that in the suggestion box and tag me, and I'll just see if I can draft some. I mean, for yours, it seems pretty straightforward. We just create a channel for it, I think. But uh, but yeah, but there are others that are a little bit more complex. So please do make sure you opt into a role. But yeah, Scott, like I think yours would be we just create a channel. Um, okay, Ray,
Hey, how you doing?
great.
So my question is, how important it is to have defensible IPs, and should those be included as a slide as well, even if provisional?
Yes, varies a lot by industry. In fact, I would say it's almost completely industry dependent. In digital
Okay.
marketing, doesn't matter at all. Does not matter one bit. But in medical devices, it
Mhm.
does. I wouldn't say it's the whole game, but it's a huge,
Yeah.
huge part of the game. Um, so, uh, so yeah, I would devote a slide to it, but I would probably, if there's like an anchor patent of some kind, you can make
Mhm.
reference to that. But I would probably keep most of it to ancillary slides.
All right. So we do deep tech. That's why I'm asking, and that's really important that in this kind of industry,
Yeah.
for us to see. That's why I asked to see if it's it is, I don't know if it's some kind of advantage to have some at least provisional patents filed and add them.
Yeah, I mean, you're probably a better judge of that
All right.
um than I would be. I'm not, but I know just enough to make me dangerous in that space. But I would say if you feel like it's important, then it probably is. And I guess, but what we're here to talk about today, and Kevin, I see you raised your hand as well. Um, I guess what we're talking about today is how it relates to the design of your deck, and then to a lesser degree your
All right.
pitch.
All right. All right. All right.
So I would just be careful not to confuse the investors. I would refer to it as it affects the business case at a high level, and then leave the rest
Right.
of it to ancillary slides, deep dives, etc.
All right. Thanks. Thanks.
Yeah, sure. Kevin, what you got?
So a bit about the patentability of items is for a pitch deck, you just put it in there and then they can go into it on a deep dive. The reasoning behind that is everyone here should understand that a patent is as good as your ability to defend it. And patent defensibility is extraordinarily expensive. And if you're going up against a big large company like that, they will outspend you to the ground. So I would put it on the pitch deck as part of the pitch deck itself. But if your pitch revolves a lot around the patent itself, it's a red flag to some investors simply because if you're going against a lot of incumbents, it's very difficult to win against those guys.
Right.
So just an FYI, that's my 2 cents there.
Sure.
Thanks. That's really important. Thanks.
All right. And just a reminder to lower your hands if your question has been answered. I don't mind coming back to people, but do let's yeah. So okay, well, what else? What any other I don't see anything in the chat right now, so anybody's welcome to unmute and go ahead and ask. Would it help to make reference to some specific examples about something? I'm just trying to figure out, like we've got another 10 minutes here, so let's just make best use of the time if we can. But if we've answered all the questions, then I'm happy to uh we can call it a day.
I have a quick question.
Yeah, what's up, Duel?
So, my question would be, especially on the pitch deck, if you're looking to be more, I guess, reputable, and you have, let's say, for an example, you're getting mentored by somebody in here or by somebody in score, adding them to, let's say, the pitch deck with their approval, I guess, would that be helpful? Or I guess, like, what's that approach on building a team, even though it might be more like consultation or more mentorship, or let's say you're part of a founder group that could um, I guess. Yeah. I don't know.
So,
That made sense.
so you're saying if you had somebody like Score involved, would you want to make reference to that because it adds additional legitimacy to the project?
Correct. Like, let's say you have a mentor through Score, like, let's say through here, adding them to the pitch deck as a team, or as part of the team in some sort of way, I guess. I guess would that,
Yeah.
that
So the way that I would do it, Duel, is I would make reference to the person rather than the organization. And so, for example, like if let's use me as an example. So if I'm mentoring you and we end up deciding that an advisory fit, I think you can. I think the person needs to be involved as an advisor before you put them on your sort of your team page. I think just getting mentorship um through like the SBDC or SCORE or or the Center for Entrepreneurship at your university and so forth. I don't think that's going to be a worthwhile value add on the deck itself, just because there are so many of those organizations out there. But if there is a particular stakeholder that likes your project enough to get involved with it, then I would put them on as an advisor, and I would do the exact same thing with them that I would do with any other leader, any of the other leadership for the company, which is say what successes they were associated with, how much industry experience they have, put the logos on there in terms of where they've worked and who they've worked with. But I do think that it needs to be someone rising to the level of at least an advisor if they're not a co-founder. Does that answer your question?
no, that does answer my question. And then when you say advisor and co-founder, like the different levels to it, you're saying like co-founder would be pretty much the top level, and then advisor would be like console would be just like the level below it.
Yeah, so basically a co-founder and other people may have different definitions for this, but the way that I've seen it used is a someone on the co-founder team is someone who is eventually intended to be working full time at the company, or a significant piece of their work week will be happening at the company. Once the company is financially successful enough, they will be part of the C-suite or whatever you call the leadership element of it long term. An advisor is someone who's not intending to go to work for the company, even after it's a 10 million, 100 million, billion-dollar company. The advisor will be there to serve. Maybe they'll have a board seat at some point, but they're not. But this is not ever really intended to be a full-time or even like 20, 30 hour a week commitment for them. They're there mostly because of their prior experience or because of their particular education or something else that gives them really high leverage value adds that aren't necessarily related to how much time they're spending there. Does that answer your question?
Yes, no, that answers it even better. Thank
Yeah.
you.
No, sure, sure, no problem. And advisory shares, if you ask ChatGPT, ChatGPT will tell you advisory shares are usually between 0.5 and 2.5%. I've seen advisory deals go up as high as 5 or even a little bit higher than that, depending on how much value the advisor is bringing to the table. But ChatGPT disagrees with me for whatever that's worth. Ethan, I wanted to get to your question. Any personal pet peeves you have that weren't in the presentation? Um, the one that jumps to my mind is not necessarily a pet peeve, but things that I see founders that are kind of instant yellow flags for me, maybe not red flags, is if a founder is too deferential, or too cocky. And I know, like, all right, well, that's helpful. You say don't be one and don't be the other. But there is a there it's just like people that you deal with in life. There are people that you say, "Oh, that person's very confident." And then there are people that you say, "Oh, that person's cocky." Like it's a matter of being respectful of everyone else's time and their money and, their accomplishments and all of that stuff, while at the same time understanding I bring significant value to the table as well. And I would, and there's this sort of implicit understanding that you need to respect my time too. And I was worried when I got into angel investing, and forgive my language in advance, but I was worried that I was going to run into a lot of dicks, like a lot of just really successful people who were eager to throw their weight around and make it and talk down to founders and make them look bad and so forth. And I was very pleasantly surprised that that has not been the case, at least in the circles I've been running in. Everybody's been very respectful. Everybody is nice to the founders. Everybody tries to be helpful. The one thing that they will do, and you guys have probably heard me say this before, but a lot of investors will say, hey, every investor you meet is going to want to see this, so you should add it to your presentation. And then they'll tell you something very specific that this from their field of expertise. And and they're usually wrong. Like most investors will not want to see this specific thing that they're asking you to add. Put it in anyway if you think there's a reasonable chance that they're serious and they might invest, but maybe put it on the ancillaries, because every investor you meet is not going to want to see that. Ethan, in terms of other pet peeves, not watching the clock. And this is not a deck thing either, but deck 9 to 12 slides is your short form deck. 16 to 22 slides is your long form deck. You can ask an investor whether they want the short form or the long form if they ask you for a deck. I always want the short form. Some investors, especially if they're more introverted, then they want to go away and study it. They want something longer. That's up to them. If they won't, if you can't get an inclination from them one way or the other, just give them the short one, 9 to 12 slides. And so, um, but in the presentation, so if you're actually in the pitch, so this is, we're getting a little past deck building here, but a pitch pet peeve is not watching the clock. And they get, you'll have 8 to 12 minutes of structured presentation at an angel network. VCs will sometimes be a little longer. But then if you get 2/3 of the way through your presentation and the time goes off, that's unprofessional. You didn't do your homework. You need to practice your pitch and make sure that it's running the right length and that you're allowing time for Q&A. It should mostly be like your presentation should be half Q&A at most angel networks. They'll give you 8 to 12 of one and 8 to 12 of the other. So it should be evenly distributed.
In my experience, be aware of how excited you get.
True.
Sometimes grandstanding or soapboxing happens accidentally, and it's completely understandable because you're very passionate about what you have. And then all of a sudden, you're like, "Oh, I've blown a couple presentations just because of that." And it's like people don't necessarily understand your passion, but it's certainly there.
Yeah. And to piggyback on that a little bit, Scott, I would say you do want to be the most excited person in the room about your business. Like people want to see that, to hear a little bit of that energy. They want to know that you're bought in. But I do agree that it can be a little problematic if there's too much of that and people are like just all right, settle down, Tiger, especially if it then starts to turn to kind of the negative of if you don't see value in this, then, It's like what multi-level marketing organizations do, where they say, yeah, and this isn't for everyone. And what they mean is you're an idiot if you don't see the value in this. And you don't want that to be your pitch. You always want to respect the investor. If investors like to be deferred to a little bit. They like, and most of them are very successful, or they inherited a bunch of money. But we won't talk about that part of it. Most of them are successful people who are used to being in charge, and it's good to let them be in charge, but to be confident in the value that you're adding. I think that's the right balance to strike.